All right, stocks are up nominally today, but a lot of this, volume not quite what it normally is. In other words, people participating in this because they're waiting to see what the Federal Reserve does tomorrow when it wraps up this two-day meeting, at which most seem to be betting the Federal Reserve will not, despite earlier fears, will not hike interest rates. Former Hostess CEO Greg Rayburn says probably the time to have started this process was a while ago, but why interfere in the middle of an election year? But Greg, you know, it's interesting. They're behind the curve, that's the point. But they're doing kind of the market's bidding, and I don't know if that's such a good thing.
Well, they're inflating the market artificially, and that's why I say they should have started this process long ago. In a zero interest rate environment, you know, you've got a disincentive to save. That cripples retirees. It cripples people who depend on interest income from safer, quote, financial instruments than equities. So it forces flows into equities and artificially inflates the stock market. So
and the real estate, and the bonds and all that. But you know, their argument is find us inflation. We don't see it outside of these financial assets, which is a big distinction.
You know, the dots. The dots, who knows what dots they're looking at. I mean, they've talked about different dots over time. I think that there's a difference between the real economy and what the Fed does with its interest rate policy and the market and how the market reacts. Let me ask you this.
If we didn't have zero interest rates for all these years, where do you think we'd be? In other words, when the first signs things were picking up and the Fed started hiking, do you think the market would be where it is, the economy would be where it is, worse, better, what?
Oh, I think the economy would be, I think the economy is doing better, right? I mean, again, that's my point. It's different than what you see in the stock market. So if they raise rates, the market's going to correct. It's not going to, there's not going to be a market mistake. There's going to be a market correction. You call it that for a reason, because there is some artificial inflation going on due to Fed policy. The economy, unlinked from that, other than the financial institutions, there's no CEOs that sit out there and do their strategy and planning and investment decisions based on what they think the Fed's going to do. I've never
But so many of them have been so used to rates so low. I don't know how they're going to adjust when that starts changing.
Well, here's what that flushes out. That's a great point. Okay, there are a lot of speculative businesses that require zero interest, that require easy access to capital at low rates to make their business plan run. That's not good for the economy. Right? So those businesses should get flushed out of the system. Then the capital will move to more healthy businesses that can sustain job growth over a longer period of time. That's what you want to have happen. That's how you want. It's a capital flow issue at the end of the day, not a market correction issue.
Did you watch any of these Wells Fargo hearings, John Stump on the stump?
I sure did.
Not a great day for him. Huh?
Really tough day for him. But, you know, I've dealt with crises in a lot of different circumstances. And what I've learned is you get one chance. You get one shot to do the right thing. And if you don't, you pay the price. He's paying that price today because they have not done the right thing in these circumstances. They certainly haven't done what I would have done in that set of circumstances.
Yeah.